Look at the recovery in stocks early on Tuesday after a deep sell-off across markets from Tokyo to London to New York. Rising early, Japanese stocks powered higher, leading gains in Asia. They are covering part of the ground lost in Monday's worldwide plunge. A series of small dips and Monday's wild sell-off in global stocks erased $6.4 trillion of investor wealth in 3 weeks. To put that loss into context for you, the investor wealth wipeout is double the annual GDP of India. Now, investors may finally be able to take a breather after a wild day, but markets are likely to face more volatility. At one point on Monday, the Wall Street's fear gauge hit a new high in data going back to 1990. Japan's Nikkei rose over 8% in early trading following a 12.4% decline on Monday. The previous session also marked the worst day for Japanese stocks since 1987's Black Monday. Japan's benchmarks rose by about 11% following a more than 12% plunge on Monday. South Korea's index surged over 3%. Stocks in China's mainland, Hong Kong and Australia were mostly flat. Overnight, the S&P 500 pared some of its losses towards the end of the session on Monday. However, the index still closed 3% lower to mark its worst decline in over 2 years. The tech-heavy Nasdaq had the worst opening since the financial crisis in 2008. US big tech firms, widely known as the Magnificent Seven, lost nearly $1 trillion. However, US stock futures point to gains when trading starts later on Tuesday.
I think what we are experiencing as well is a rebalancing of assets, moving away from some of the stocks mentioned earlier, like Nvidia and Apple. And since these stocks historically have also gone very well for a long time, I think some of the big sort of legendary investors, like famously Warren Buffett, is recouping investments. So he halved his shares famously, for example, in Apple. So he's recovering this, he's realizing the profit. And I think he will soon, after the market turmoil has gone down a bit, I think he will start investing in something else, perhaps smaller stocks. So I think the big stocks have had a good run for a long time. And it's actually quite healthy that we're seeing now some sort of rebalancing.
Speculation of an impending US recession weighed on global stocks. The repricing was so severe that the swap market had predicted a 60% probability of an emergency rate cut by the Fed in the coming week. However, those chances faded overnight.
The jobs market in the US a bit softer than expected, yes, but it's not sufficient 1 month to actually say this is going to lead to recession. I think it's actually a cocktail of circumstances. US has been a safe haven, the only safe haven for quite a long time, besides India actually. Indian stock market has been doing very well. But when US is slowing down, it sends jitters through the markets because Europe is not doing very well, and Germany is supposed to be the biggest market doing well. It's not doing very poorly in Europe, so Europe's no safe haven anymore. Japan, of course, mentioned before, problems over there. So we have a cocktail of circumstances, and then we have the Middle East, of course. So all these things taken together have made many people worried.
In commodities, following a 3-day dip, oil prices rose again as optimism in stock futures suggested recovery in US and Japanese benchmarks. The shutdown of Libya's largest field redirected global attention to West Asia and boosted crude.